Good. Wow. My voice. Good morning from Los Angeles. Welcome to beautiful Pacific Palisades. This is not my house. This is a friend of mine's house. And welcome to Trading with Sergio, Monday edition. Market's kind of flat, but a lot going on in the crypto world, which I'll talk about. I'm going to talk a little bit about the potential second round of Japanese yen carry trade crisis. Potential. I don't think it's going to happen, but a lot going on. We're going to be talking a lot more macro today than I usually do because I think it is making crypto suffer. I'm pretty sure liquidity is getting drained. But before I do that, again, welcome to Trading with Sergio, Monday edition. Hope you all had a great Thanksgiving. Hope you did your shopping. Today is what? Cyber Monday, right? Hope you did all your shopping. I contributed to the GDP of the country on Friday. So, consumer spending, keep consumer spending strong because we need it. 80% of our GDP is consumer spending. What's going on? So, crypto overnight, massive sell-off. A lot of folks on X who are perma bulls are what are they doing? They're just complaining. I mean, if you do any chopsticks analysis, technical analysis, let's say, we're we're retesting the lows, right? We should retest the lows. We stopped exactly where we should stop. If you do pay attention to technical analysis, I keep my charts clean. Don't draw any lines, but I do keep a couple of moving averages and just to figure out where the trend is and a Bollinger Band. And we did bounce to the middle Bollinger Band, which is the 20 EMA, and rolled over. So even if there was no macro effects of the liquidity drain going on, most technicians, let's say, should have expected that every test of the lows. And we're getting that. And a lot of the underlyings, 2x, 3x ETF, are getting crushed. So, in fact, coincidentally, I have a two-part video on 2x, 3x ETFs coming out noon today and noon on Wednesday. Please go check it out on the channel. It clearly, if this doesn't clarify all the questions somebody has about 2x and 3x ETFs that they're stuck in, nothing will. So that's how confident I am that these two videos are going to put this issue to bed and how dangerous they are, because on my thumbnail I used skull and crossbone. That's how dangerous these 2-3x ETFs are if used improperly, if bought and held for long periods of time. So please go check those videos out. If you're not a subscriber to the channel, please subscribe. Turn on notifications so you get all the notifications of live streams and when the new videos come out. It's free. And please share. So if you think the content is valuable. Where do we start today? Obviously, we'll go through positions, a little bit bloodletting in my account, but added to a couple of strangles in my account. I don't mind adding to shares of what I already own. So I'm trying to do it through strangles, naked strangles. Again, position size is super important. So let's go with the economic data that is expected this week, although I think we just caught up now, but so what's happening? So today, ISM manufacturing PMI data. Tomorrow, JOLTS job opening data. Wednesday, November ADP non-farm employment data. I think this is the key number as opposed to anything else, because whatever BLS puts out, Bureau of Labor Statistics, which they were on vacation because the government was closed, they're putting out much older numbers and they always get revised anyway. That's the history of BLS. I think ADP is much more accurate. The ADP non-farm employment data is much more accurate. On Wednesday, I'm looking down at my list. On Wednesday, S&P Global Services PMI data, not that important. November, these are all November numbers, by the way. So the JOLTS number that's going to come out is September because it's by BLS, but ADP is November. S&P Global Services PMI data is November, coming out on Wednesday. November ISM non-manufacturing PMI data on Wednesday. None of these are that important. However, Thursday, initial jobless claims data, unemployment's ticking up. Initial jobless claims data is coming out. And on Friday, September, again, BLS is bringing this out. September, we're going back to September, which is like 2 months ago. I don't think it's going to make that much of a difference. PCE inflation data is coming out. And on Friday, Michigan consumer sentiment data is coming out. Now, as far as the consumer is concerned, according to Adobe Research, the online sales were up 9%. Brick and mortar sales for this period were up 4.1%. So the consumer is hanging in there. But how are they hanging in there? They're hanging in there by plastic crack, I'm pretty sure. But then on the other hand, if you do go check Federal Reserve Economic Data website, credit card defaults are going through the roof, as well as used and new car loan defaults are going through the roof. Mortgage defaults are ticking up now. So under the surface, economy is shaky, quite shaky. Although if you look at the indexes, it doesn't tell that story whatsoever. Is there going to be a catch-up trade? Probably. And then there's a lot more going on though under the surface. Not just, let's just forget about the U.S. indexes for a moment. Let's look at globally, right? Globally, what's going on to interest rates specifically. So at the start, I said I'll talk a little bit about the Japanese yen carry trade, and I will. So the economic data is important. I think for me, the most important thing is this week, initial jobless claims for Thursday. That's one. And on Wednesday, ADP non-farm employment data, which is current as opposed to revised or anything else. So where should we go now? Let's continue talking a little bit about, so anyway, good morning, everyone. Good morning. Well, you have to hang in there for a little bit. I'll talk about that in about 5 to 10 minutes. It's pretty simple, really. It's not that difficult, but hopefully I'll be able to explain it in much simpler terms. And well, yeah, those are the two questions that I will answer. So hang in there. If anybody wants to join the live, as usual, let's put the link up if somebody wants to join. Here's the link of the live stream. All I'm asking you is that you're in a quiet place with a good internet reception so we don't get interrupted. And I see myself in two screens. So there's a vertical version of YouTube now, and there's also a horizontal version. Whichever one you like, it's available. So let's go with consumer spending. Consumer spending was pretty strong. American shoppers spent a record $11.8 billion on Black Friday, up 9.1% from last year. And that's pretty strong, right? So how's that happening? Obviously, sales had to happen. As you guys know, by the way, most retailers do, I think, close to over half their sales in that 1.5 month period between Thanksgiving and Christmas or New Year's. So, but there's a disturbing sign in all of this. The disturbing sign is BNPL. BNPL is what? Buy now, pay later. There are a couple of public companies actually now that you can actually trade if you like. One is Affirm, the other one is Klarna. Klarna is the largest one. So a lot of people are using BNPL. I talked about this before. They're using it to buy their groceries these days, which is unreal to me. Like, you should not do that at all. Now, if you're doing a major purchase like a refrigerator or a 80-inch TV or whatever, maybe you should look into BNPL if you don't have the cash flow available to take advantage of a sale, let's say, or whatever. But according to Kobesi letter, buy now, pay later sales are now expected to hit a record 20 billion between November 1st and December 31st this year, per Adobe Analytics, and that would be a 2 billion increase from 2024. And that does not include any other forms of debt, such as plastic crack, to do this shopping. Think about this, folks. Buy now, pay later is becoming a major part of millions of people's lives. Now, again, financial literacy is key in all of this, because I don't think most people understand what the repercussions could be if they miss a payment on one of these buy now, pay later programs. It's basically buy now, pay later has been digitized version of layaway plan, let's say. Although you do get the merchandise right away on a layaway plan. We knew how it worked in the old days. So if you're going to do buy now, pay later, please do not miss a payment. If you do, you're in deep doo-doo. Don't do it. Make sure you put on reminders on your calendar, although I'm sure the companies will remind you with an email or whatever, not when to make these payments. But they're extending these payments too now. It used to be, let's say, 4, now it's up to 8. Look, there's a space and a time if you're cash strapped and you really want to buy something for your house, let's say. Major purchases, I'm not going to say it's okay. I rather say if you don't have it, don't buy it. But then if there's such a great sale going on a refrigerator and, major purchase items, okay, maybe you should use buy now, pay later. But please understand what you're getting into, and do not miss a payment. Do not miss a payment. Make sure your cash flow is available at the time of the payment when it's due. Because to me, most people do default on these. And the fact that the consumer and a lot of Americans are buying their groceries on BNPL now shows where the economy is at. Let's not look at the stock market. Stock market is not a great gauge of the economy. Indexes specifically, a lot of stocks are down 40-50% from their highs already. But the point is, I'm not against debt. Okay, I think debt is the oil of the engine, but you have to manage it properly. Like, if you don't change your oil in your car at the proper time, what will happen to that engine? The oil, right? It get old, and then you blow your engine. So that's a good analogy for me, that if you're going to use BNPL, understand what the risks are, understand what the downside is. You should not just be blindly going, oh, look, just give me 8 payments, no interest for all this time and this and that. I'm like, fine, but just don't miss a payment. Again, certain debt I'm against, like credit card debt, carrying balances. I'm completely against that. So most of this purchase is done, that up 9.1% from last year on during Black Friday. I'm pretty sure it's done with credit card debt, right? I mean, who goes into any store these days and puts down the cash? Look, I'm not against that, but I'm against carrying balances on credit cards. Why not float the bank's money for 30 days and then pay it off? I am against BNPL, except maybe with the exception of major purchases. Please don't go buy your groceries, or don't go order DoorDash on BNPL. Don't go order a burrito that's going to cost you 4 times more by the time you eat it and go to the bathroom and you're done with it. Don't do these things, folks. This is just toxic. I mean, I understand these companies, are flourishing because people are using it. And the reason people are using it is because we're a spender society. We like buying stuff. Most of the stuff we don't need, but we do like buying stuff because it makes us feel good. And the point in all of this is, buyer beware. What are you getting into? Read the small print. Most people don't. Most people just look at it at the point of purchase. They go, oh, yep, okay, cool. I have 6 payments to make. I'm pretty sure I'll make it. Interest free. I'll buy this thing. that I needed for 6 months, I'm like, great, okay, fine. But as long as you understand what the downside is, what happens if you lose your job in those 6 months? Now your cash flow is all upside down. What are you going to do? You miss a payment. You know what happens to interest rates if you miss a payment on a credit card, or if you miss a payment on a buy now, pay later plan? I mean, it's insanity, right? That's where these companies make money. Do you think they're just giving you this thing for you to go buy interest free for 6 weeks or 8 payment plans because they don't think you're going to miss a payment? They're counting on you to miss a payment. They're counting on you to be late. They're counting on you on a credit card purchase. They're counting on you to be late, right? Or they're counting on you to carry a balance. That's how the banks give you all the plastic crack. Because that's what most people do. Most people don't have the cash flow to buy the stuff, charge it up, and 30 days later pay it back with no cost. Literally, you floated the bank's money. You're not a good customer for that bank. The good customer for the bank is the one that carries credit card balances forever, and the best customer for the banks is the ones that make the minimum payment on that credit card just to keep the ball rolling, keep the can down the road. And then what happens? The item that you bought costs you 3, 4, 5x, because the interest rate costs on those is ridiculously high, minimum of probably 20 to 25%, all the way up to 40, 50%, depending on your credit rating. So my point in all of this is BNPL has become a major part of the American consumer's purchasing power. Well, maybe if used properly, okay, but also goes to show the general health of the consumer in the country. And, if the NPL sales are going up, if credit card defaults are going up on a time where unemployment is relatively under control, what's going to happen? And we're seeing all these layoffs. These are good, high-paying jobs by, UPS and Amazon and Verizon now. And, these are tens of thousands of people getting laid off. So, I don't know where the economy is at, but then now we have a new quirk. The question was about Japanese yen carry trade. So let's pull us back to last August of what happened, okay? I have explained this. There are videos, by the way. If you guys don't understand it, please go check out those videos. Go to the channel, do a search under Japanese yen carry trade. I've done 3 videos clearly explaining what it is, so I'll go through it real quickly again for the people who are new to the channel and asking the question. There is a different version of Japanese yen carry trade going on, and it's draining liquidity from the global markets, from crypto as well as stocks, and how it may affect everything else that's coming up. So the original Japanese yen carry trade crisis was, or the history of Japanese yen carry trade is that Japan was in a deflationary cycle for decades. And in order to come out of this deflationary cycle, they had lowered their interest rates below zero, literally below zero. So what happened? Well, what happened is that a lot of institutions leveraging everything, or specifically hedge funds, they went and borrowed in Japan, okay, at zero interest rates. And then they came back to the US, either invested in stocks or invested in bonds, right? So we had a time when we were hiking interest rates coming out of the pandemic because inflation genie got out of the box. We were trying to put that in the box. Well, we're never going to do that now. But the main point is, if I'm a hedge fund, if I leverage this trade by 5, 8, 10, 20x, I can literally go borrow in Japan at zero cost, zero interest rate. Okay, so Japan became the creditor of the world. And then what did I do? I turned around and brought the funds back. So now there is the currency part of this, which I'm going to try to explain as well, how the Japanese yen carry trade unwind happened last August. Not last August, August of 2024. Is that we, as a hedge fund, let's say I'm a hedge fund, I go borrow in Japan at zero interest rates, except that when I do borrow in Japan, I can borrow with Japanese yen. So what do I have to do? I have to convert my US dollars to Japanese yen and then borrow at zero interest rates. Okay, so I borrowed it, I levered it 5, 8, 10x, and then I turned around and brought it. I took that money and then started buying US Treasuries. So the difference was, In Japan, interest rates were 0. In the US, they were 4 on the same duration bonds. Okay, automatic 4%, lever it up 10x, everything is wonderful, right? Okay, then what happened though? The Japanese government, because Japanese government debt to GDP ratio is like 200+%, right? They have pumped so much money for them to come out of the deflationary period. By the way, deflation is probably worse than inflation. So in order to come out of that, they kept the interest rate at 0 forever. In fact, negative interest rates. So a lot of people went and borrowed money in Japan, right, at 0 cost, and then came and invested in US stocks, and so that created additional liquidity in the global system. Well, what happened is that in April of 2024 is that now the Japanese bond rate started spiking, and the Japanese government, Japanese Federal Reserve, the JGB, they raised rates automatically because they don't want to now get from a deflationary cycle to an inflationary cycle. That's as simple as I can explain it. So when that happened, the Japanese yen started gaining value against the US dollar. So that's the problem. That's when the problem showed up. So there's two parts of the carry trade. Well, I go borrow in yen, okay? And when I do close this trade, I have to convert those yen into dollars. I cannot bring dollars back to the US if I'm a US hedge fund or any other global hedge fund. I have to transact in my currency. There is a currency exchange that has to happen. Well, if the currency relatively stays stable, that carry trade will work as long as it does. But when the Japanese yen starts gaining value against your currency, yes, you borrowed at 0 and invested at 5, but then, and you have the leverage, obviously, but then when the Japanese yen starts gaining value against your currency, now you have the currency risk. Now you have to unwind all this before you lose your shirt, right? That's what happened last August, August of 2024. What's happening now, as of today, for the past 6 months or so, actually, I talked to my members group a few times. Do we have part 2 of Japanese yen carry trade? Well, what's happening now is that the JGB is the long-term bond, Japanese government bonds, it's called JGB rates, have been skyrocketing. Why is that happening? Because their debt is out of control now. It's just like we are. We have 38 trillion in national debt. Japanese debt is also out of control. While the bond vigilantes or the people who trade bonds, they're going like, okay, inflation, they went from a deep deflationary cycle to non-inflationary cycle in Japan, and the bond market rates have been skyrocketing in Japan. Well, let's see if we can do a Japanese yen carry trade now, right? So the 10-year bond, 10-year note in Japan is about 1.87. That was 0. Well, now if I'm going to do a carry trade, I have to go borrow at 1.87%, but then the US rates are about to come down, right? Although they have not, the Trump administration would like interest rates to be lower. Well, that's not happening either. So what's happening now is that we have skyrocketing rates in 10, 20, 30-year bonds in Japan. That is actually draining liquidity out of the system, because if I were to do a carry trade now, I can't, because look at the difference in the Japanese 10-year note versus ours. Look at the difference in the 20-year bond versus ours. Look at the difference in the 30-year bond versus ours. The Japan interest rates have been spiking, like going through the roof, actually, and they're almost catching up to ours. So now what has happened is that, the question goes with how does it affect crypto? It affects crypto. It is no liquidity. And when the rates are going up like that in Japan, right, there are a lot of banks who hold their own bonds that are carrying billions in unrealized losses. So now the point in all of this is, in fact, Kobeissi Letter had a good tweet, and then I'm going to take a look at that and read you guys that. What the carry trade was, the liquidity pump of the globe, especially on a levered basis. Well, that liquidity pump has stopped now. because they were borrowing in Japan and coming buying US stocks, indexes, Nvidias, whatever they were buying, or bonds. Well, that has stopped. So now, if you look at the TLT today, which is the 10-year inverse index in the US, it's tanking. Why is it tanking? Well, Japan is the #1 holder of US treasuries. Now, because their rates are skyrocketing, are they going to be forced? In fact, they have been sellers. China has been the second one. China used to be the top US treasury bondholder. They have been liquidating and shifting into gold and going away from dollar-denominated assets. Well, now what? Now, today, our 20-year note or 20-year bond rates are skyrocketing as well. Is that a hint that the Japanese government has to now sell US treasuries? So this is all interconnected. But #1 reason for crypto, for it to tank overnight, was liquidity is gone. So a lot of this money was going into probably crypto as well with the carry trade. Well, the carry trade is not possible anymore. The fact that Japanese 10, 20, 30-year bond rates or note rates are almost as high or higher than ours. The only saving grace may be now we may become the creditor of the world, although our ass is on fire with our 38 trillion in debt, national debt. What can happen is that, as Powell indicated, QT is about to end. Well, the timing of this is obviously pretty coordinated, as you guys can tell, because the Japanese government may have to hike rates now. So if they hike rates, is the yen going to gain appreciably against the US dollar? And are we going to have the second carry trade crisis? I don't think it's going to happen that way. I think what's going to happen is that, first of all, the liquidity pump that existed in Japan stopped. There is no more carry trade. You can't do a carry trade when the Japanese rates are equal to your bond rates. Where are you going to go invest that money? And you're 10x levered, God forbid, currency exchange rates are also going to be affecting your trade. So not too many people are going to do it. Well, that liquidity is drained from the system, and that's why I think crypto is getting a sell-off. Obviously, there's a lot of leverage in the crypto system as well. People are getting liquidated overnight. But let me just read this small passage that I caught my eye this morning. So pressure on Japanese government bonds is surging. Kobeissi letter is pretty good. I follow them on Twitter. So open interest in the front month of Japan's 10-year government bond futures just hit 188,000 contracts, the highest since September 2024. The number of outstanding future contracts that are still active has surged 65,000 since June. So if open interest is going up and the bond rates are going up, that means the bond prices are going down. That means a lot of people are shorting the Japanese bonds. Well, think about it. If rates go up, what happened to bond prices? Bond prices go down. It's an inverse relationship. So a lot of people are going short the Japanese bonds because Japanese interest rates are shooting up. So since then, Japan's 10-year bond futures have declined 2.6%. So people who are shorting are making money. During the same period, 10-year government bond yield has risen 34 basis points to 1.81, the highest since June 2008. Rising open interest along with falling prices suggest a growing accumulation of short positions among investors. Japanese bond market is in trouble. It is in trouble, and what's happening is that it's just putting a noose on this leverage, and it's not only slowing down, but it's stopping it dead in its tracks for future Japanese yen carry trade potential. So, with all that said, when liquidity is not there, what happens? Markets go down. Even, there's no support for markets, really. Like, who's going to come buy the indexes without a Japanese yen carry trade? Well, but I highly recommend for you guys to go check online JGB rates, what has happened over the last year or so on the 10-year, 20-year, and 30-year. Look at the way interest rates are going through the roof in Japan. So interest rates going higher in Japan is not happening because Japanese government wants it, because that's pretty bad. But Japanese inflation now is going out of control, and the bond markets see this. And our bond market today is tanking on the 20-year side. Why? That's because Japan is the largest holder of US treasuries, about 1.7 trillion. What if they're going to be forced to sell that? What if they need to defend? What if they need to defend the yen, right? So there is a lot going on, and a lot of people on X, a lot of these supposed gurus don't make the connection and think about it. Look, you can't day trade, obviously, looking at the JGB rates and thinking about the carry trade. But if you're a swing trader, if you're a position trader, specifically if you're an investor, you need to read these tea leaves and understand what could happen. I'm not saying it's going to happen, because I think the timing of us ending QT and probably going into QE, the timing of the Federal Reserve completely changing, becoming basically a White House entity, losing its independence, has a lot to do with this. So now, are we going to open the pumps and start pumping and printing? Well, we may have to, right? Because we need liquidity. We need liquidity in the system. And when liquidity gets drained, a little bit of a sell-off, it gets exacerbated because there's so much leverage in the system. So to understand the relationship is important, obviously. But can you trade off of it? Probably not. But the carry trade that happened in August of 2024 was completely related to the Japanese yen gaining on the US dollar, because the currency exchange were putting a lot of positions upside down. While this time, over the last maybe 4 or 5 months, the dollar has been gaining on the Japanese currency, but now the Japanese bond market may force the Japanese treasury to raise rates, okay? Because the Japanese treasury is not the one that raising rates. The market participants are raising the rates because they're looking at the debt to GDP, they're looking at what's going on in the country, they're looking at inflation, and the bond market, FYI, the long end of the tail, the long end of the bond market does not listen to the Federal Reserve, US Federal Reserve. It has its own, it's so large that the Federal Reserve, our Federal Reserve, cannot do anything about the long rates. They can manipulate or lower the short end of the curve in federal funds rates and things like that, but they cannot control the long end. And today you can go look at a TLT chart. It's falling out of bed. The reason is the bond market is so large that nobody can control that. And the bond market, Japanese bond market, is extremely large, obviously. And the Japanese Federal Reserve or the Japanese central bank cannot control the long end. And the long end, go check it out. Just Google or put it in Gemini on Grok, say JGB 10-year, 20-year, 30-year bond rates. And it's out of control. It's just going up literally every day. Rates are going up in Japan every day. Well, rates going up will slow down the economy. They may get in a recession. If they catch a cold, the rest of the globe may catch a cold. So there is a lot going on that, I mean, I'm not going to lose sleep over it. I trade and I invest, and whatever happens, happens. And I'll always risk manage properly, hopefully. But hopefully I'll explain the Japanese yen carry trade. So that's what's going on. Again, the link is up there if anybody wants to show up. Let me put that up again. You can come show your face. And then we'll talk a little bit about crypto now, what's going on. I have a couple of positions that are getting hurt, obviously. And but when I go to the positions, you guys will understand what's going on there. What else I want to talk about? Buy now, pay later, we talked about. Oh, well, again, so I've been talking about this for a while. And the 4-letter word, right, that's applicable to all the DATs, digital asset treasury companies, that's called MNAV. It's not the FUCK word, okay? And so here we go. MNAV stands for multiple to net asset value, or market cap to net asset value, whichever way you want to go at it. But they're both the same thing. So there's talk, obviously, now that they're going to test Michael Saylor and MicroStrategy. He may be forced to sell his Bitcoin. Well, that I don't think is going to happen. But what has happened, MicroStrategy today is like 160, okay? It has gotten cut in more than half, maybe down 60%. So, and then, reminder again, please go check out the video that's going to come out today. Part 1 is today, part 2 is on Wednesday at noon Pacific, about 2 and 3x ETFs, okay? But let's talk a little bit just quickly about MNAV. MicroStrategy's MNAV at its peak when the stock was $500 a share was 2.2. Okay, meaning net asset value is how much Bitcoin they hold, because Michael Saylor buys Bitcoin, right? Okay, with some debt and with some convertibles, and now with preferreds. Well, these have, the convertibles are very low interest rates, 0 to 1%, but then the preferreds are being, pushed out at 10, 12, 14%. Well, that's a dividend you have to pay. Well, MicroStrategy as a business does not have that kind of cash flow to service this. So a lot of the market participants are thinking, okay, well, they have to sell Bitcoin in order to pay the preferred shareholders. By the way, convertible debt comes first, preferred shareholders come next, and common stockholders are dead last. That's why there is so much pressure on the common stock, because common stock worth nothing in the scheme of, in the totem pole of, let's say, first obviously comes the bonds, and then the preferred stock, and then common stock. So there is a hierarchy, right? And so now, as of last week, Strategy's MNAV is down to under 1. So what has happened is that a lot of hedge funds, they have shorted MicroStrategy and bought Bitcoin, because that's been the trade that's been going on and still going on. And it's because once MNAV drops under 1 on any debt or any digital asset treasury company, they cannot issue shares, or they cannot do ATM sales and buy Bitcoin or buy Ethereum or buy Solana, whatever they do, because that's like eating your own flesh. You can't do it. You're diluting for no reason whatsoever. So if that's going to stop, if he can't buy, well, look, the whole world is buying Bitcoin, right? Supposedly. Strategy is one of the top buyers. I think they're up to 660,000 Bitcoin. But now their MNAV, including the debt, even if you take the debt out, is under 1. And the common stock keeps going down every single day. And then I see these fools on X, they go like, oh yeah, MicroStrategy, I'm buying MicroStrategy. I'm like, you buying MicroStrategy, you're losing money every single day, just like I'm losing money on BMNR or BMNU, which is the 2X ETF. So the point I'm trying to make is, please understand MNAV. Please understand why these things are happening. And today's video that's going to come out is going to clearly explain there are 2 poster children for 2X ETFs that, if you do understand it, then you will go, okay, maybe I shouldn't be touching these things. One is obviously MSTR and MSTU. And the other one is Tesla and TSLL, TSLA and TSLL. Please go check out those videos. Please share it. Make sure you understand it. Specifically the one on Wednesday that's going to come out. It's clear numbers. Like, numbers don't lie. Just go check it out. It's a 6-minute video. Spend your 6 minutes and understand how dangerous these 3X ETFs could be for your account. So people are shocked that MNAV is going under 1. They have been going under 1 because these stocks keep getting shorted, and then once Ethereum or Bitcoin starts dropping in value, this accelerates the process, right? Because Strategy and BMNR and SBET, they're just the tail of the dog. The dog is ETH, the dog is Bitcoin. Well, that's what's going to happen. The price was going to go down anyway, but now it's accelerating on the downside, because now they cannot actually go buy, and BMNR pretty soon is going to be under 1 MNAV as well. Then what is Tom Lee going to do? Well, he can't issue shares and buy, because at the moment, I think he is still above 1 MNAV, or only one above 1 MNAV now is BMNR. So he's still doing ATM sales and buying ETH, collecting ETH. Well, once it goes under 1, you can't do it. You should not do it. You can do it, but then you're going to dilute. What you should do if you go under 1 is turn around. If you're going to raise cash, start buying back your own shares and increase ETH or BTC per share for your shareholders. You should start buying back stock. And so there are certain debts that are down to 0.6 MNAV. Literally, they're selling. So if you understand MNAV, okay, if you're 1 to 1, you're good, let's say, okay? If you're above 1, you can do ATM sales and buy more of the underlying of BTC or ETH. If you're below 1, you cannot do ATM sales. You can do preferreds, you can do convertibles if there are investors for it. So if you're under 1, what you should do is come back and buy your shares back in the open market, right? Well, most of these companies don't have the cash, right? So how are they going to do that? We don't know. That's why MSTR is still under pressure, like 155 or 160, whatever it is. So the way you can look at it as well as a positive is that, well, if you're under 1 MNAV, okay, let's say SBET, Sharplink Gaming, which I think is the best run DAT out there at 0.84 MNAV. So that's a 16% discount from 1. You're basically buying, if Ethereum is 2,700, by buying SBET shares now as opposed to buying Ethereum is better than buying Ethereum, right? So if it's above 1 MNAV, it's better to short SBAT and buy Ethereum, or short BMNR and buy Ethereum, because that gap is going to close if you're above 1 MNAV. But if you're under 1 MNAV, then it's better to buy the DAT, BMNR, or SBET and short Ethereum. That's the trade. You guys have to understand the relationship there. So if you do that, if you're buying, or even if you're not doing that trade, if you're just buying strategy under 1 MNAV or SBET under 1 MNAV, and SBET being, let's say, 0.85, you're buying Ethereum at a 15% discount. Because they don't have any debt, they don't have any bonds, they don't have any prefers, they don't have any convertibles. You're buying Ethereum at a 15% discount. You're buying $1 for 85 cents, basically. So buyer beware. Again, still, I'm in it and I'm bleeding with it, because now Ethereum price is going down. Yeah, 0.8584 MNAV is holding, but then Ethereum price is going down. I mean, if Ethereum price goes down, obviously SBET is going to go down as well. So hopefully I explained all these questions. If you guys have any questions, please put them up. We'll go to positions real quick, and then I'll answer some questions if there is more questions. So if you guys have any questions about any of this, post it. So we talked about the Japanese yen carry trade potential part 2. We talked about the BNPL issue, buy now, pay later. We talked a little bit about MNAV and what's going on in the crypto world. Liquidity is getting sucked out of crypto world. It's just it's pretty bad. So hopefully you guys can see this. This is the, yep, you guys can. All right, so indexes are not selling off, but underlying stuff is getting crushed, literally getting crushed. So this is SPX. Let's go to big charts if you guys want. Actually, let's go to the positions. All right, so positions haven't changed. I added to a naked strangle today on BMNU. I still have 400 long leaps on ASST. Those are January 27 2.5s, and I have 300 of the 5s. So that position has not changed. What I did is I'm long 3,500 shares of BMNU. The cost price, somehow TOS is not adjusting. I'm pretty sure I did a spreadsheet. I'm adjusting it myself in my head and on the spreadsheet. It shows 891. It's 778 because I had sold naked strangles and I got assigned shares at 10, 7, and 10, 8, and 7. But then I had taken in all that premium. So for some reason, TOS is not adjusting. So if anybody from TOS is watching, which is Think or Swim, please adjust the prices. Don't let me do it on my spreadsheet. So immediately, of course, once I got assigned the shares 2 weeks ago, actually, 2 Fridays ago, what I did is I went and sold 8, 9, and 10 calls against the shares. And then I started selling naked strangles again because I want to add to the shares. Well, this time I'm doing the 611 strangle so far I have done 15 more lots of those. So 611 strangle, I'm at $1.46. So if the stock is at 615, if the stock is below 6 these are December 19th, by the way. If the stock is below 6 by December 19th, I will get assigned another 1,000 shares of BMNU, but then I took in $1.46. So 6 less $1.50, let's say, 6 less $1.50 is 4.5. I'm going to get assigned at 4.5, which I'll take. And then I did another strangle between the 5s and 11s, right? I did that at $1.20. So, okay, if it's below 5 BMNU, I will get assigned another 500 shares, which will get me up to 5,000 shares. But I'm getting assigned shares now with the premium I taken in at 4.5. And 5 minus 120 is 380. So that's the beauty of doing cover strangles if you want to add to a position. And at the same time, I sold cover calls. I sold the 8s at $1.20. I sold, these are all December 19th. I sold the 9s at 95 cents, and I sold the 10s at 70 cents. Now, if BMNR rallies, and if BMNR doesn't rally, BMNU is not going anywhere, which is the 2x ETF. Great. Okay. So if I get called away, great. This will turn into a massively profitable position, and all the strangles will expire worthless as well. Now, you may ask, well, what if your 11 gets into trouble? Great. If my 11s are getting into trouble, that means stock is close to 11. Then the puts are going to expire worthless off the strangle, and then I'm going to get called the shares with 2-3 point profit. I'm like, okay, cool, no problem. That's all manageable. So that's the BMNU. I will add to the strangle. I will probably add to the 511s if I can get them. I can't get them more than $1 now. So today, actually, I was able to get off some 611s at $1.35, which is good. And I will add to the 511s probably if I get them around $1. If I get them more than $1, great, I'll do it. Because I certainly do want to get assigned a few more shares of BMNU. And then the premiums are so good on these that if the cover calls expire worthless, so if the stock is between, let's say, I don't know, 6 and 8, all the cover calls are going to expire worthless. So my cost basis is going to drop from 878 all the way down to probably 678. If I get assigned more shares in the low 5s, then it's going to drop some more. Then you can turn around, sell cover calls again, and make this like a little ATM machine. I used to do this with MSTU until I figured this MNAV game. So I'm going like, okay, be careful with this. Again, my account is about 70% cash. I'm not going to push too hard just because I think it's the best thing since sliced bread. It's just a trade that I'm putting on that I think it's going to work out. But next position is BZAI. I'm long 5,000 shares at 243. Stock is 236. I'm debating to hold this or not. If the market starts selling off, I'll probably take a little hit and get out of that. And last but not least, I have 210 of the January 16th expiration, $15 calls on SBET. This is just a long trade. I'll probably squeeze this out with a little loss or a little profit because this started as a call debit spread. When SBET dropped, I bought the short side back and adding to the long side, but we'll see. We'll see how this all ends up. But I do like my BMNU trade. A lot of people are going to say it's a falling catching, you're catching a falling knife. I understand. But with the puts and calls, with the strangles that I'm putting on, lowering the cost basis by selling the 8, 9, and 10 calls, and then I can turn around and sell them again for January. And then if it's not above 8, I can because I do think Ethereum is going to probably find some support, around 22 to 2,500. But then this BMNU is going to get hurt more. But then I don't mind buying some more shares at 450 and 380, while the stock is 617. Obviously, for that to happen, it has to be under 6 and under 5. But then I don't mind buying it. And if it doesn't work out, then it's all premium collected. I'll put them out again. I'll put the strangles out again. But I will post all these positions with full transparency on the community page of the YouTube channel, which I do every Monday, Wednesday, and Friday. I don't think anybody is doing that, but I have nothing to hide. I have no race. I'm not in a pissing race with anyone, especially with some of the fools on X. So hopefully this was a good session that you guys understood. Buyer beware is important. I don't want to go through too many charts, honestly. There's no reason. This is the SPX. I am thinking actually of putting a put debit spread on SPX. We're at 68.40. I was thinking of doing like 68.40, 68.20, and put up about $7 to get 20 out of it. December 19th, if I do put it on, that's what's going to be. But indexes are holding while everything else is tanking. So to me, it's like, if you're short, if you're long puts on the indexes, yeah, God help you, man. You're losing money there and you're losing money on the underlying. So that's a tough gig. It really has been tough couple of last months of the year. And a lot of people are hoping now for the December rate cut. I don't know if it's going to happen or not. But with what's going on in Japan, I think if they do it and if they start, end QT, market may stabilize some more. But indexes really are only 1% from all-time highs. Everything else is down 30, 40, 50% though, because if you're holding 3, 4, 5 beta stocks, you're getting smashed. So yeah, that's it. If you have any questions, let's see. Okay. No, I don't believe in stops. I put mental stops. I watch it close enough to do it and have discipline enough to unwind it. Oak or Bruna. Defunk. I wondered where does BMNR go if ETH is 2,500? Figure it out. It's not that difficult, right? I don't know where ETH is. So if it's 2,750, also 2,500, that's another 10%. It'll go down another 10%. And then BMNU will go down another 20%, 18 to 20%. We'll see. Yeah, you're the other one that's stuck in BMNU. Yeah. I mean, I think we're retesting on ETH and Solana and Bitcoin, technically anyway. I mean, we can make lower lows. But I mean, overall, if at 2,500, we were at 4,700, that's close to 50%. Right? I mean, we had these 50% corrections on crypto before. And, BMNR buyers are, although Tom Lee is still yelling about, I don't know, what is he saying? 150,000 for BTC in January or something. Look, I respect Tom Lee. I'm not going to say shit about it, but, maybe this time he's not correct. But then again, if you're doing it because Tom Lee's in it, then you started off the wrong leg anyway. We're all human, and I don't think Tom Lee knows what the hell's going to happen to ETH or BTC. I don't think anybody knows. So, I don't know for a fact. I'm willing to admit that I don't know. But there are a lot of gurus on Twitter. I got to take a battle or here and there with these people once in a while, but then it's a waste of my time. It's good entertainment. They talk about this like they know something that the rest of the world does not know. Oh, I do this, I do that. I'm like, you don't do shit. You don't even probably understand what the hell you're getting into. Also going, yeah, I tried. There's other videos that I think are better on the channel. So go do a search with Japanese yen carry trade or whatever, and then hopefully YouTube will find them for you and then give them to you. And there's other explanations of it. Other people, I'm sure, have explained it. Might be a menu breaking after I get assigned. That's a tough, bro. Yeah, I think the biggest mistake you made is the biggest mistake you made is position size. I truly believe that. I don't know how big your account is, but it seems like you YOLO'd into this. In fact, I'm dealing with a gentleman who YOLO'd into it as well. He did it actually a lot higher than you did, but we're trying to manage it. And so I do, by the way, I do coaching on the side. So if you guys are interested, send me an email. We'll see where it goes. But yeah, I think you YOLO'd into it for some reason. And look, unless you have a $2 million account, okay, fine. But if you don't, then this position that you're talking to me about is a minimum of $2 million account position. And if your account was $500,000, you should have been at max a third of this, if not a quarter of this. And yeah, those premiums when you take in are juicy, but then shit happens, man. Because that's why I talk to a lot of people about the dangers of selling options. People make it sound like, oh, there's no risk in selling options. I'm like, what the fuck are you guys talking about? I don't mind anything, bro. Hope you know me asking. You have tremendous knowledge of markets. I did it for 26 years, man. It's a burnout. It's a tough gig, bro. People think it's like we're just sitting there and fucking shitting money. We're not. I mean, we're working. I mean, it was great. Look, everything was great. I didn't leave because the other thing, I'm just burnout, literally. I mean, it's a tough gig. It's a very competitive world. You have to produce nonstop, right? You have bonuses that you're thinking of and all these things. And it's exciting. It's wonderful, but it's a young man's world. You know, don't watch all these CNBC clowns at the 60, they go and talk their book on there. My mistake was when I left it, I should have gone to private equity because that's when private equity was blowing up. But then I was like, I had already made my money. I was like, okay, I'm not a huge fan of buying Lambos and, you know, living in Rodeo Drive in Beverly Hills. I'm just, you know, I like my life simple. I still trade, by the way, and that's how I pay the bills. I have a family office account, so it's not like I'm not trading. I just go, you know, trade my money now instead of somebody else's money and get a little crack of it, you know. So I've done fine in life. I'm not complaining. So, but it's a tough gig. I literally did it for 25, 26 years, and you know, Wall Street is not what you guys think it is, by the way. So, and things have changed. Automation has come around. Speed of execution, right? I mean, we used to make money hand over fist because we would front run you. We have inventory of shares, and you want to come buy shares, you know. I mean, today front running is done with HFT algos, but they do it for pennies, milliseconds and hundreds of pennies, but they can't lose money, right? And there have been years that we lost money, and because system was different, speed was different, everything was different. We used to trade eighths and quarters, man. Then decimalization came in, and that lowered the profit margins and for desks like ours. Because in the old days, we can chuck a stock with half a million shares stock with a quarter of profit if we had it in inventory. So, and I mean, look, things have changed, and it's a young man's game. My brain is still super sharp, as sharp as it ever is, but you know, run my own money. Why not? You know, I thought of starting a hedge fund maybe like maybe it's 2010, but the regulations on those are so tight, and I don't want to deal with other people. I just, if I mess up, it's my money. I don't have to be responsible, get sued, do this, do that, none of that. Oh, by the way, none of this is investment, financial, or trading advice. Don't follow me. What I do is very risky. Do your own due diligence. I say that every time because I have to kind of say it. Yeah, that's why I left. Anyway, so hopefully I answered all your guys' questions. Defunct should email me. I don't know your positions. I don't know. It says January. Well, hope and pray is not going to get you there. Look at today. Down 20% on BMNU. I mean, I'm eating it too, but I'm eating at such a small size that, and I have it covered in so many different angles, right? My entry was okay. That's what your entry was wrong, right? So my entry on BMNU started with the naked strangle of the 10 tens, meaning 10 short 10 puts, 10 calls. I took in $2.30, so that's 770 already. Then all the other naked strangles were, you know, 810, 710. Well, you're taking in money, right? You're getting assigned. I got assigned at 10, but my true cost is 770. And then now I turned around, and once I got assigned, turned around, sold 8, 9, 10 calls. Well, I took in on average $1 for a month. They expire worthless. Okay, cool. Now it's 670. I get assigned 6s and 5s with the new strangle. It'll be lower. And then one time you sell the call, then I can mess around and sell $10 calls month after month, right? And lower my cost basis. But then if it does jump to 10 at some point, which I don't know when, maybe never, I don't know. But at least I have a strategy. I have a structure. I have a risk tolerance and management in mind, as opposed to Let's just go YOLO into BMNU because Tom Lee's in it, or whatever your reason, or you follow some Discord guru or whatever the fuck these people do, which I think take a lot of people like you, make them victims, because I'm not sure how much of a knowledge you have and what you did, and because you probably looked at BMNU from 50 to down to 15, I go, or down to 20, let me go sell some puts, not thinking it could go to 5. Especially, you should be the one, especially watching that 2x, 3x ETF videos. It's tough, man. I feel for you, I feel for you. And but you're in it. You gotta know how to swiggle yourself out of it, or swim again. You're definitely swimming against the stream now. So you need to figure out what you can do. And I think your problem started with position size. Yeah. Yeah. Okay, I entered that. Should we? Absolutely. You should ignore everything they say on CNBC. I have CNBC. I have the screen on the upper left-hand corner of my screen. It's on mute. The only time it gets unmuted is during Fed interest rate decision for about half hour. I can't watch these people. I know these people, by the way, like Jack Barugian, Santelli, I've interviewed them. I know some of these people. Jim Cramer has blocked me on Twitter. I mean, absolutely. Bro, nobody knows. Nobody knows. Everybody has their own theory, opinion. Opinion is something. If you put so much credit in some joker, I'm not going to call Tom Lee a joker, but now, a lot of people are turning on him now. Tom Lee can say whatever he says. Look at the price. Look at the price. See, the price today is the price. That price is the correct price at this second. That price is what the transactions are happening at. There's a buyer, who is thinking it's going to go higher at that price. And there's a seller, right, who's diametrically thinking the opposite of what the buyer is thinking it's going to go lower. That's what makes the market. I wouldn't listen to anything on CNBC. Create your own thesis, create your idea. First of all, ETH, crypto in general, forget the shit coins, crypto in general. I'd follow 3. And I hodl BTC. I bought more at 85,000. DCA'd more this morning. Every Monday, I put in the same amount of money into Bitcoin. And I take it out of the exchange, put it in my cold wallet. So I believe in it not because I heard some clown or Michael Saylor on CNBC. Or I put on the BMNU trade not because I think Tom Lee is the best thing since sliced bread. No, because the numbers made sense. I can structure a trade that makes sense. So the way you work is you create a thesis based on facts. Okay? Like, why was I bullish a year ago in China? And now what's happening? Oh, you create a thesis, you structure a trade, and then you live with it. Even if you created a thesis and believe in it, committed to it, doesn't mean you're going to be right. Then it's up to Mr. Market to make you right or wrong. But whatever they're saying on CNBC, which I don't listen on crypto, I'm sure somebody comes on and says Bitcoin is losing its value. Now there's, Zcoin or whatever. I don't have the time. I trust me. I F up or I'm the victor. I take the blame and I take the victory. So actually I have a good video coming out about ETH, between ETH and BTC, which I like more. And you should watch that. No, I don't listen to CNBC. The other thing is crypto is not, cannot be treated as a company, right? Okay, so let's say Meta had a horrible earnings, stock dropped from 750 to whatever it did, 580. You can figure out Meta, you have so many different metrics, right? Free cash flow and earnings and If you look at PE ratios, which nobody does, sales, revenue, you can look at all these things on Meta, debt, and all that stuff. And you can make a decision because it's a live, living business. Crypto is, what is crypto? A holder of value for BTC, let's say. Is it digital gold? I don't think it is, but let's say it is. Is it an inflation hedge? I don't know. So all I'm saying is you don't have much on crypto. It's just the price moving. Why it moves, how it moves. Obviously, it moves with the leverage getting liquidated on the way down, leverage getting liquidated on the way up, on the shorts. But why does Bitcoin move? I mean, everything moves for supply and demand. You know, somebody they couldn't believe themselves that Bitcoin sold off $4,000 in like a matter of 30 minutes last night. So I go, more sellers than buyers. I really meant it. I meant it. That's what it is. There's more supply, more sellers than buyers for that half hour. And if it keeps going lower, that means the selling is out, you know, buyers are pulling their bids, or there's not enough buying, and the sellers are overwhelming the buyers, and it's going down. The same thing happens on the way up. More buyers than sellers. You know, people ask me this all the time. This is, why did this happen? I go, there's more buyers than sellers. Oh, why did it go down? More sellers than buyers. I think it's as simple as that. As simple as that. Is your opinion MST? What is my opinion? Is that what you're asking me? MSTW? What is MSTW? I know MSTU. I know MSTZ. What is MSTW? Is that the, God forbid, is that like MSTY? I don't know. Let me take a look. I don't even know what it is. And when I don't know, I say I don't know, by the way. I follow MSTR, MSTU, MSTZ. Let's take a look. MSTW. What is it? Let's see. MSTW. Oh. Oh, is this the cover call one? Roundhill, MSTR weekly. Oh, no. Don't do it. Don't do it. This is a structured product, right? That pays this weekly dividend. Oh, no. Look at this price. How many dividends did you collect already? It's definitely not going to be, it's definitely, no. The lower the price goes, by the way, the less premium they're going to take in on MSTR. And that's what's happening now. And that's why your dividends are going to go lower and lower and lower. Look at the price slide. This looks like a new issue at 51, down to 10, down 80% since July. Have you collected 80% in dividends? There's another one, MSTY, which is the older one. What a disaster that's been. And there's that one. Yeah, to be careful with these ETFs and shit, folks. Here's MSTY last year, 39.29. And this is longer than actually a year. In fact, let's go to 3 years. Oh my God. Yeah, last November, about a year ago, 46.5. We're down to 666 today. That's an ominous number. And I guarantee you didn't collect enough dividends on these structured products. I hate all structured products. All. I can do better. You can buy IBIT and sell weekly calls on it, and you can do better yourself. Why do you need this garbage? It's my opinion. Again, I could be right, I could be wrong. I'm pretty staunch on my opinions because I do the research. I know about these structured products. These structured products only make the founder or it makes the traders rich. Basically, they sell cover calls. Structured products on any item, such as cover call writing strategies, underperform on the way up and underperform badly on the way down because you can't sell enough calls to give you full protection when the price is going down. I don't like any structured product. I'd rather do it myself. Don't like it. Zero. Hey, what's up, Brock Capital? You too. Take care. Yeah, you're welcome. Definitely ignore all of it. Yeah. I'm not a huge fan of structured products. There's 15 trillion of them out there, though. People love it. Yeah, I get weekly income. I'm like, yeah, but I mean, look, if you're in it, I don't know. Like, but I mean, we just looked at it. Since July, that thing is down 80%. Have you collected 80% of dividends in MSTW? Well, number one, MSTR is going down. It's all connected to the MSTR, right? So, and the lower the MSTR price goes down, the less the premiums are going to be. Michael Saylor was saying, "I would create volatility. You can sell options and create, volatility is your best friend." Blah blah blah. I'm like, yeah, but every day it's going down. I don't know where MSTR is. I think it's like, what is it now? 150, 160. I'm not going to touch it. So MSTR 164. Okay, lower lows, lower highs. Maybe you'll go to 100. That is good support at 100 if you're a chopstick technical trader. Yeah, right here is 100 is good. So that's another 60% from here. And this is MSTU, folks. So part of the video is going to come out is MSTU, MSTR, Tesla, TSLL. MSTU just broke $1. It's 91 cents. Do I say more about this 2x ETF? If you bought it last November at 31, we're down to less than $1. And if you bought, so that's down like 95%. And if you bought MSTR at the high last year, 1 year, 1 day. Let's put the 1 year, 1 day, so make it clear. MSTR in August this year was 457, down to 160. Yeah, and that's why MSTW is just going down with the price, and dividends you're not going to collect. I don't think you collected 80% dividend. This thing was literally down since July 28th. Actually, it just came like end of July. It came out at 51. 51 down to 11. That's 80%. Last time I checked. Yeah, I don't like any of these structured products. There are many out there. Roundhill especially, like, yeah, I don't like it whatsoever. I mean, the best thing is for you is like buy IBIT and sell weekly calls. You'll do better. Why don't you do it? I mean, yeah, the dividends look good on these juicy, but look at the price decline. So basically, on top of that, I think I'm not an accountant, but I think there's a double whammy there. So dividend income is income. You have to pay taxes on that, and then while you're taking the loss on the underlying, I don't think you can take that loss, even if you sold it, and wipe out your income, because those are two different streams of income, two different things. Like, I don't think you can take the capital loss in MSTW and write it off against your income. I'm not sure, but I don't think you can. So anyway, all right, well, we did enough. Oh, good luck to everyone. See you guys on Wednesday. My 8th or 9th free article on my website is coming out in about 45 minutes. Please go check out the website, www.sergioavadian.com. I want to improve financial literacy in this country. And the only way I can do it is if you read it and share it. Even if you're an experienced trader, there's something for that. But yeah, I want to improve financial literacy, coming from current participants to newbies to children to college kids, because if you had financial literacy, you wouldn't do BNPL for your groceries. That's a fact. Let's stop there. So please go subscribe. It's a free newsletter. I'm not asking you for anything, just your email, so it drops in your mailbox every Monday at noon. There are some really great articles already, about 11 articles on the blog already, and you will learn a lot. So maybe the basics, but you will learn a lot, because most people ignore the basics, and that's why we get into trouble. What else? Wednesday I'll be back, hopefully. Trading with Sergio Wednesday edition. Hopefully we'll get a rally on BMNU. Maybe not. I don't know what's going to happen. Please be careful who you go hang out with on the internet. Social media is not what it's put out to be. X, YouTube, whatever, everybody has an opinion. Everybody says, buy this, do this, do that. Or the Discord channels, paid Discord, whatever. I'm like, no. My opinion, anyway. Definitely don't watch CNBC. Well, you can watch CNBC, but don't listen to CNBC. What else? That's it. I'm going to go have a cup of coffee and lick my wounds because I'm in BMNU. But then I have some protection with the covered calls. I want to buy more shares, making maybe 15%, 18% of the port trading account. Here's the breaking news. My long-term port is actually beating my trading account this year, which is sad, which goes to show I'm buying about this one stock that's doing it. So I have 4 stocks. I have the video that came out yesterday, actually. I have 4 stocks. I'm looking to add a 5th. It may be one of these debts, actually. So I have 4 stocks. Lululemon, I'm up now. Google, I paid $152 in April. It's $1.50, but I saw some cover calls on that. 350s, May 350s. I want to do 1 year, 1 day, take advantage of the long-term cap gains. I just bought UPS about a week ago. I think I'm up a touch on that. And I'm long Kava. I'm down about 14% on Kava. I got assigned at 60 and 55. And stock is, I think, 51. So I have 4 stocks. I had Unity that I sold with a double this year. And I had Nike. I sold maybe 25% gain. I switched Nike to Lulu. So 4 stocks, pretty diversified. Lulu, UPS, Google. Now with a cover call, May 26, 350s. I took in $26 out of those. So it'll be 152 to 376 if I get called away. Amazing. And then Kava. So those 4 I have. I'm looking to add a 5th. If you guys have any suggestions, if you have any long-term ideas, please put them on the chat next time, and then I'll take a look at it. And I'll add a 5th stock to the investment long-term port. When your long-term port is beating the short-term trading account, it's not a good thing. It's just not for me anyway. Disappointing, actually, but it is, because I took a double there. This year is a tough year. I'm not going to deny it. I'm still green, but I'm like, dang, a little bit. All this work for whatever. But I'll catch you around. I'm not concerned. And so much love. Be safe. May all your shorts go down and may all your longs skyrocket. See you guys on Wednesday.